Here.
Before we get to the Fed expectation, what's your latest GDP forecast for globally and the US?
For the world, we took it down to about 2% in 2020, with most of the weakness concentrated early in the year, Q1 and Q2. That had been a little over 3%, so that's a pretty meaningful downgrade. Partly China, but also partly the spreading virus and spillovers from China. In the US, we're at 1.3% now for this year. That's down from a little over 2%. Also meaningful.
And with the US, if we focus in on that, if the Fed does act as you expect, 50 basis points cut fairly soon, does that offset any of that, or is that growth forecast factoring in already those cuts?
It is factoring that in. So if we didn't have the ability to respond, or the policymakers didn't have the ability to respond, then the numbers would be weaker. So we do expect some support from monetary policy.
So a lot of talk about a supply shock and what's going on with China and the fact that it's been so hard. What about on the demand side? What are you anticipating in terms of an economic hit from demand in the U.S.?
Well, I would call it a risk aversion shock potentially. So we are building in, some pullback in consumer categories that involve a lot of face-to-face interaction as we see more cases of coronavirus in the United States. Obviously, all highly uncertain. A lot of it depends really on the epidemiology as opposed to the economics. But then there's also the question of how do consumers respond to reports of increasing cases. But I think that would be a demand shock and really a risk aversion shock, not in the market sense necessarily so much, but in terms of how consumers behave.
What's your assessment of eurozone growth and the ability for the ECB to do anything there?
We think Europe is also taking a hit, and of course they have seen more cases, so that hit is probably actually, if anything, somewhat bigger. So eurozone growth, we think, maybe a quarter point to a half point this year. That number was 1% or a little bit above, so we've taken it down to very close to zero. We have the ECB responding, but only with a 10 basis point rate cut. They're already at minus 50 basis points, so they can only sort of inch their way forward. And so we think the response isn't going to be nearly as aggressive as in the US.
So there's a G7 finance ministers call that maybe gave the market some hope and optimism today. Clearly, central bankers are getting ready, that unusual statement from Powell. I guess one question is, does any of this matter when what we really need to hear is news about a vaccine or news about a treatment or some sort of good news on the trajectory of the virus?
Yeah, there's no question that what happens with the virus and what happens with the public health response and maybe even what happens with the fiscal policy response is more important than central banks. Central banks can focus on the things that they can control, but they're not going to be as central in this kind of situation as they were in the financial crisis, for example. As you say, there is a call scheduled for G7 finance ministers and central bank governors, and I think there is a reasonable chance that we're going to see a coordinated move in maybe even sometime this week.
We're all going to provide liquidity and swap lines and all that
cut
stuff?
rates. And I mean, we are forecasting 9 of the 10 G10 central banks cutting rates. The Bank of Japan is the only exception. So we think they're all, or almost all, already going to do it. So it seems almost like a freebie to get a little bit of additional signal from doing it together.
Just want to point out recession highs up 920 points on the Dow. Jan, what's the bear case, though? What percentage chance do you put on China's growth, for example, being so much lower than people are currently pricing in, such that it really drags down the rest of the world?
Well, I think the alternative scenario, the main alternative scenario, is a recession. We think that the global economy is going to contract for a quarter or so. That doesn't quite rise to the criterion of a recession in our base case, but it's not too far away. We wouldn't have to see that much more weakness, whether it's out of China and then the spillovers associated with that, or the maybe pullback in consumer activity to turn it into a recession. Our best guess is that it stops just short of that, but clearly there's a lot of uncertainty, and a lot of the uncertainty is in areas that normally economic forecasters don't have to have a judgment on, namely the medical issues.
Very quickly, there's some talk that the Fed could come out before the March meeting in a few weeks, an emergency rate cut. How high is the bar for that?
I think it's basically, if you get a coordinated move, then it would probably be quite soon. If it's every central bank by itself, then I think they would probably wait until the meeting. But we're going to have to see in the remainder of this week whether this is something that they decide to do.
Jan Hatzius, thanks for joining us.
Thank you.
Of Goldman.